articles of organization. They're the only thing that is actually required in the setup of the LLC. They are state-specific. They have to be filed with the state. You have to pay your fees. What I'm going to do in the LLC Wizard courses is I'm going to go through the articles of organization, and I tell you which states require which stuff. You're going to go to the internet site for your state. You're going to get the form. You're going to bring the form in, and I'm going to fill it out. We've got an hour's worth of audio CD where I sit you down and I go through each one of these. Drink water there, getting dry. So, yeah, well, lawyers dry out too. They're old and dusty usually. But I'm going to go through each one of the aspects of the form for you, so that you know what to fill out. I mean, have you ever tried to fill out a form and not knowing what was supposed to go in the form? There's no problem. I'm going to walk you through it step by step. So in the in course 2, we go through every aspect of the articles of organization. Now we're going to maximize the tax benefits. Once you've filed with the state, the next thing you do is you attack the taxes. And the decisions you make at this point are going to make a big difference as to how much you actually take home. First of all, you've got to decide what tax structure you want. Do you want the S Corp, C Corp, partnership, sole proprietorship? Well, you can only be a sole proprietorship if you've got one guy. If you've got one guy and you're a sole proprietor, we're going to call the LLC a disregarded entity. And we're not going to get into that, but what it means is you file your taxes, your Schedule C on your 1040, just like you always did. It's really, really easy, but you still get the tax protection, or excuse me, the asset protection. The asset protection is the same, whether it's a disregarded entity or it's taxed as a C Corp. You understand that. Asset protection has nothing to do with how it's taxed. And I'm going to show you step by step how to fill out the 2553, an SS4, all of these forms. I mean, how is it that the IRS can make the instructions as to how to fill out the form more complicated than the form itself? Have you ever had that experience? Now, I can take it you've tried that, huh, Todd?
Yes, we've had to go through mountains of paperwork provided by the government.
And they always make the instructions twice as bad as the actual form itself. So it's nuts. The attorney, they don't go into the tax aspects of it for you. They just sit you down and say, okay, this is what you want. But they don't. If you ask them about the taxes, they'll say, go see your accountant. Now, your accountant, he may sit you down and he may say, okay, you want it taxed this way, or this way, and he may charge you a few $100 to fill out the forms for you and get you on your way. We got to go deeper than that, and we're actually going to go deeper than that in one of the later courses in the LLC Wizard. But how you actually use the company makes a big difference as to the bottom line of the taxes that you take home, or I guess would be the taxes you don't pay. And the rich people, they figure this out, and that's what we're going to do for you. All right, so we're going to choose the best tax structure. You're going to follow my instructions for the IRS form, and we're going to give you some specific tax techniques. Say that one 10 times fast. Let me just give you some history of taxes. The income tax was implemented, Section 16, in 1913. Came in at 8.5%. And then over the next couple of years, it immediately went up to 70%. 75%, actually. And then it worked its way back down, and you can see that trough there in the 20s from about 1924 to 29. What did they call the 20s? The roaring 20s. The economy went nuts in the 20s because we were coming off this big tax burden. And all of the companies and everybody figured, man, I got a ton of money, we're going to do business. And they did business. You see that hike right there about 1930 where it goes from 25% up to 62% and then takes a little jump and goes all the way up to 80%? What do they call the early 1930s? The Depression. That's Herbert Hoover. The Depression was caused because taxes went through the roof, and it just shut business down. We kind of got used to it, and we went along. And do you understand that in the 50s and 60s, you could be making $1 million and paying $920,000 of it out in tax? Is that incentive for you, Todd?
That is, I did not know that. That's wild.
That's wild. Then you see it came back down, went along flat for a while, and then you see the drop in about 1978, and then a second tier drop down to about 1984. That's Ronald Reagan. Ronald Reagan, that's Reagan economics. Everybody said he was nuts. Dropped it all the way back down to 28%, highest tax bracket. Tell me, in the 90s, what happened to the economy? It went nuts. You'd think the politicians would be able to look at this and say, okay, if we want the economy to go nuts, we keep taxes under 30%. Clinton hiked it back up, and then Bushy dropped it a little bit there, and then it's going back up today. Based upon that chart, we are basically at historic tax low. If you're planning for the future, are you going to bet that taxes are going to go down or taxes are going to go up? I hate to say it, guys, but we only got one way to go, and that's up. People don't understand what taxes do for them. If I can cut your taxes by 10%, that's huge. No, it isn't just the money that you get back. If I can make it so your investment isn't taxed, that's huge. Look, if I take $1 and I double it 20 times, $1, 2, 2, 4, 4, 8, 8, 16. You understand what we're doing here, Todd?
Yeah, I see it.
Double $1 20 times, I end up with a $1,048,000 and change, right? $1,048,000 and change. But there's no tax on that sequence. That's just straight math. Everything you do is taxed. Your real estate's taxed, your stocks are taxed, your bonds are taxed, you're taxed, your food's taxed, your property's taxed, your income's taxed. Everything's taxed. Let's tax it. $1,048,000. You keep that number in mind. Okay, I'm going to take $1 and double it to 2. But wait. I got $1 in gain. So let's say I got a 40% tax. And between Fed and state, a lot of people in 40% tax bracket these days. So I have to take 40 cents off, so I don't end up with $2. I end up with $1.60. Double $1.60, $3.20, but I got to tax $1.60. I end up with $2.56. You understand what we're doing here?
Yep.
So on the one hand, no tax, doubled it 20 times, I had $1 million. I've just taxed it at 40%. You just lost $400,000 in this tax. Is $400,000 a big deal to you guys? Big deal to me. Yeah,
absolutely.
But did you really lose $400,000? That means you've got $600,000 left. How much have you got left, Todd? We're going to play a game.
I know it's more. I know that the taxes are going to be more than $400,000 because you got opportunity costs didn't double there.
Okay, so double. So you're saying that I've got $200,000 left. Is that what you just said?
Okay.
Do I hear 200,000? Do I hear 200? I heard 200.
Yep.
Do I hear 100? 100. 100 going once. 100 going twice. 100 going three. No takers for 100. Do you know how much you actually end up with? $12,089. $1 million versus $12,089. Let me think. I write a column that goes out to 300,000 doctors every month. And these docs call me up and they say, Phillips, how do I get an extra 0.25% return on my investment? And I say, oh, a 0.25% return, that'd be nice. How is your investment taxed? When the IRS, when Congress set up IRAs, they figured, okay, we put $2,000 a month, a year away. That was what it was in the back of the old days. You don't remember that, Todd? You're not old enough. But it started out in 1974 as $2,000. You put your $2,000 away. That's going to give mom and dad a little extra money when they retire. They'd never seen this chart. They didn't understand. They didn't know that over 20 years, mom and dad would have $1 million, $2 million, $3 million in that account. I work with a lot of $1 million IRAs. Congress never envisioned that. Trust me, guys. They didn't understand this principle. What we've got to do for you is to lower your adjusted gross income, your AGI. And I ask people in the live audiences, how many of you know what AGI is? And I get about 15% of the hands. They have no clue what AGI is. What is it? Well, it's that number. It's the tax number. It determines what your tax bracket is. It determines what your itemized deductions are, what your exemptions, when they phase out, when you get the child care credits, when you don't, what your alternative minimum tax is. It's everything above the line on the first page of 1040. And your accountant has never set you down and said, you got to fix it there. You can't fix it on the second page. It's a personal versus entity question. The entity questions are on the first page of 1040. You don't have a company, you're toast. There's nothing on this page. You go directly to the second page. It's a personal versus entity question. And if I can take something off of the first page, the lawyers call it above the line. If I can take something off the first page above the line, then it reduces my adjusted gross income. And if I can reduce my adjusted gross income, I can get myself down into a lower tax bracket, which means I save money on every dime that I make that year. It's a big deal, guys. The LLC is your most valuable tool to do that with. Our country is changing. The AGI is becoming more and more and more important. You've heard of them talk about if you have over $250,000 as a couple in adjusted gross income, we're going to kill you. Listen, you guys are looking down the barrel at a 60% federal tax in the next year or two. Trust me, mark my words. Read my lips over the phone, over the webinar, all right? It's not going to be happy. How do you lower your AGI? I went out on the internet a while back, and I typed in lawyer AGI. And in all dead seriousness, there were a couple of sites that said, I didn't really find anybody that told me how to lower my AGI, but there were a couple of sites that said the way you lower your AGI is you adopt kids. I guess these people have never had kids. Todd, kids are more expensive than the tax. Let me just tell you that, okay?
I agree.
At any rate, we're going to walk you through step by step how to fill out all the forms and that go along with the LLC so that you can set it up to get the tax benefit. The tax benefits to some degree are going to be based, and all of your asset protection is going to be based upon the operating agreement. This thing, the other thing that you do. How are we going to block the personal creditors from getting your LLC? A well-written operating agreement will protect the company from your personal problems. Now, I'll explain that in 2 seconds. We've got to issue the stock. We've got to put the logs together. We've got to do all of this stuff. And everybody's sitting there going, well, what's the log? What's the stock? No.